Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully all you guys had a good week in the markets and a good final day of trading today. And in today's markets, guys, well, the battle rages on at the lows. It was another day of push and pull. Initially, we started on the SPY and the QQQs with a gap down open. You can see that right about here. Gap down open after several corporate earnings yesterday, namely Nike and FedEx, planted more worries in consumers' minds and investors' minds as well, as they highlighted the uncertainty surrounding the macroeconomic policies of the new Trump administration. Thereafter, guys, it only took one little piece of news out of the Trump administration to turn the markets around and send them towards a gap fill, and then eventually for a somewhat positive close on the Qs. Not quite on the SPY, but definitely on the Qs indeed. And what was that one piece of news, guys? It was, of course, that Trump would say that there's going to be flexibility on the reciprocal tariffs. He did not give any more details than that. He just said to reporters that there can be some degree of flexibility. Now, this is funny, guys, because we've been covering a lot of the data releases in the last few weeks. We had the non-farm payrolls a couple Fridays ago, and even though the markets reacted well, it was not enough in terms of hard data to stop the bearish slide in the markets. We also had the JOLTS jobs openings report that showed positive data once again. So the non-farm payrolls was good. The JOLTS jobs openings report was good. Then we had a series of inflation reports. The CPI, which wasn't enough to turn around the markets, even though it was good. The producer inflation report, which was good, but wasn't enough to turn around the markets. And even Jerome Powell himself, with him saying the impact of tariffs would be transitory, was not enough to detract the bears in the final stages of the Wednesday afternoon into the Wednesday session. No, because we know that the market is entirely focused on Trump's words pertaining to tariffs, and he is the only one that supposedly can move the markets enough intraday to end us with a somewhat positive bullish momentum candle. So in today's video, guys, we're going to take a look at a few key things together. Number one, we're going to be going over big technical analysis in terms of the SPY, the QQQ, and all of the minor sectors as well, which is what we do every week. We recap every single sector in the markets and see where there may be some opportunities. Thereafter, we're going to recap our big tech names in terms of the TA, daily and weekly timeframes as well, and see whether some big tech names are poised for continuation rallies into next week and how we might be best suited to position for those. Thereafter, we're going to go through the swing trade list that I brought up last Friday and last Sunday as well. Just do a quick recap. I gave about 15, 20 different tickers to be looking at. We're going to go over them again and see whether some have paid fruit or maybe some are still providing some decent entries. And lastly, to wrap it all off, I'll give you guys a glimpse into the trades we made this week in the Discord, and also which trades I have remaining in my portfolio for the upcoming weeks to come. So it should be a very fun and trading focused video, guys. Let's jump right into the action, shall we? So the SPY ending down 0.27% despite a very decent end of the day rally, still down. The QQQ's up, as a matter of fact, 0.33%. A lot of that came the last 15 minutes of trade, and this was largely a lot of short covering. We know today was a very big quarterly and weekly options expiry. The monthlies as well expired today, and a lot of people had puts, so you could assume that a lot of that was puts being unwound, shorts being covered as well. And we also have a little bit of index early rebalancing that will be lasting into next week. So all those factors combined led us for a very nice last 10 minutes of rallies on the Qs, as a lot of the rebalancing found its way into a lot of the Mag 7 names, which carried the index higher. Overall, though, if you take a look at the heat map, guys, this is how the day was. A lot of big tech names were green, except for NVIDIA, but the rest of the market still lagging a little bit behind. Definitely not a broad day of rally, so to speak. And then on the one-day relative performance, guys, you can see that, well, we had communication services, tech, and consumer cyclicals, which were higher, but everything else kind of just having a slow bleed to the downside. On the 1 week, because we had a green week in the markets, yes, I know, a very rare green week. After multiple weeks of downside, the QQQs barely ending green, and the SPY, unfortunately, also ending green, but not by much. So that led to a 1 week relative performance where several sectors were in the green, but energy and financials were the two biggest ones. Everything else still very muted. And on the 1 month, well, the damage is still done, of course. Everything pretty much still to the downside. I'll remind you, we are possibly coming into bullish seasonality here as we wrap up the month of March. Traditionally, we can see some rallies into March and April, but please keep in mind, over the next few weeks, we get the reciprocal tariffs from the Trump administration, which could make a dent in the seasonality if it's not well received in the markets. We still stand at extreme fear reads, about a 23 on the Fear and Greed Index, as market momentum largely remains in extreme fear conditions. Net new 52-week highs and lows on the New York Stock Exchange remains at extreme fear, as not many names are hitting new all-time highs in this market. Stock price breadth as well remains at extreme fear reads. We can take a look at our breadth indicators real quick, and you can see percentage of stocks above their 20-day moving average still at about a 37% read. Not as bad as it was a few weeks ago. And if we do dive back down there, I will reiterate, always historically a great opportunity over the last 10 plus years. You can go all the way back here. Always a good opportunity to be adding to your long-term portfolios. Percentage of stocks above their 50-day moving average, 29%. Same context in the last roughly 10 to 15 years. When we come into these low conditions, fantastic time to be adding the highest quality companies in the world to your long-term portfolios or ETFs if you're an ETF investor. And percentage of stocks above their 200-day moving average, only a small 38% of stocks above their 200-day, reminiscent of the sell-off in 2023 and arguably some of the bottoming out conditions in 2022. You can see that we can go lower, but is it a good time to start in terms of historical averages? Yes, and we just DCA with our paychecks into the market to build very high quality long-term portfolios that your future self will definitely thank you for. So moving into the actual analysis on the SPY, well, you can see that we did have the gap down open, and this chart is a little bit messy. So when things get a little bit messy, even though we have a crossing MACD, which shows that the bulls are regaining some semblance of control and going for a possible daily uptrend out of the support on the SPY, which is 565 down to 550. The cleanest picture is, of course, on the futures chart, which is the same thing largely. It just encompasses overnight trading. You can see the bulls trying to put in some of the lows of the week. We still have not closed, though, a candle above the most recent weekly highs, which is about 56.73 on the futures read. We will be looking for that daily uptrend expansion, crossing MACD, showing bullish momentum, maybe a little bit of nice seasonality, and we are just looking for a weekly lower high, right? Because we know we are in a weekly downtrending cycle for the markets right now, so any move higher, we'll just be looking for a lower high. Keep in mind, if we go back to the SPY chart where I have my annotations, the resistance range stays put 585 to 575, so we will keep an eye on the size of the bounce. The higher the better, but it will always just be for a lower high. Some people call that a dead cat bounce. We will see how high the cat goes before it possibly dies. Moving on to the QQQs right now. Qs not looking too bad either. We are trying to form some form of a daily higher low pattern and going for a daily trend change, but we are still below the 200-day EMA. And if we do get that bounce, we are coming up to $495 roughly, up to about $500. This sweet spot, which used to be, all-time highs back here at that time, resistance, support for the markets, and now will be resistance once again. In terms of the support, we are currently trying to find a bottom, 483 down to roughly 468. You can see this best on the futures chart as well, trying to go for the daily uptrend shift with a crossing MACD on the daily timeframes. But I will remind you, same thing as the SPY, right? Just looking for a lower high before possibly the bears come back in control, and then we will see, do the bulls have it in them to stop this and turn it into a weekly uptrend, or will that lower high result in a retest of the lows, or maybe even lower? That is the expectation into next week if the bounce does so choose to continue. If we flush the lows on the Qs and the SPY, you're heading right down here, 450 to about 430 on the Qs. That would be a top to bottom pullback overall of 16 to 19% in one clean shot if we do not get any weekly bounces into the end of March and early April. Moving on to the XLF financials right now. Financials also with their own very decent respective bounce, a very healthy bounce if you put the fibs on this. It is currently now a 50% retracement size, which gives the bulls roughly a 50% chance of, if we start rolling over, setting a higher low, and going for the daily trend change. Support below remains 48.31 down to about 46.81, but I'll remind you of the context as well. Just big consolidation, right? It was a beautiful weekly uptrend for a very long time on financials. Now we've rolled over, so now the bulls have to get it all back. If they can't do it in one clean shot, they'll be trying for two. But if the bounce ends here and we start rolling over hard, there's a high likelihood that we retest these lows, or maybe even break down lower. We'll take this one day at a time. And for some of my favorite financial plays, stick around to the end of the video when I go through all of these swing trades. Moving on to XLV Healthcare. Healthcare now looking terrible right now, but doing absolutely nothing since the Tuesday session. Really getting stuck here at resistance 148.76 down to 146.50. I'll remind you of the context. It was a nice weekly uptrend. We were going for the inverse head and shoulders, but unfortunately the bulls kind of unraveled. We are arguably, bouncing off these lows, 143.53. The one thing you do not want to see, guys, is a rollover from resistance. It would just be a cue for the daily downtrend rollover and continuation. And if things get really bad in the healthcare sector and they cannot keep it up and get past this resistance range and keep the weekly uptrend going, you're coming right back down here, 140 to about 135, the first stop, which is a very large region, guys. It's the whole 2020 all the way through 2022, even 2023 range of all-time high prior resistance. So the bears are not going to be able to get through this very quickly, in my opinion. There's going to be a lot of buyers stepping in down there. Moving into semiconductors right now. So semiconductors down 1% on the day, but not losing any major key levels, right? We know that semiconductors were in this perpetual daily downtrend, and you got a nice bounce, right? The size of the bounce was fairly adequate. Got to give it to them, 78% retracement. So that being said, still looking right now for a daily higher low for a possible daily uptrend change. A bounce is always nice, but if it's not followed by a trend change, you cannot say that the weekly bounce is now in store and the weekly higher lows are set. If they just roll everything over from here, guys, keep in mind the weekly down swing continues and the next line of defense is all the way down there, 200. So we will take this one day at a time. The bulls still holding support now, which is 232 down to roughly 218. They desperately need to hold this and come back into the confines of this range that they were stuck in for the last roughly 6 months. Moving on to the Russell now, the IWM. So the Russell down 0.62%. It's not looking terrible for the Russell, right? But it's also not looking fantastic. They're still trying to find the daily higher lows right now. The bounce sizes deep are decent. However, keep in mind who's in control right here, right? It is still your bears. So the lower highs are right here, 216. Nice sized bounce, but in all reality, is the bounce size enough for the bulls to really have a great chance? It is only a 50% retracement. 50% chances, guys, that the bears just take full control back and revisit the support range, or 50% chance for the bulls if we can possibly expand. In my opinion, the Russell is really beholden to the SPY. If the SPY keeps falling, the Russell will not go up on its own just magically. Overhead resistance stays put, 208 up to roughly 217, which is a very big level, guys, right? Huge congestion, resistance, and then all the way back here from 2020 and 2021, big support. So that is a very big level. If they cannot get it done and the weekly bears are too strong, coming right back down to support, 200 down to 192. And lastly, the Dow Jones. Well, the Dow Jones marginally up, but you can see how much of a struggle this resistance range has been. It is a confluence of the 200-day EMA, the 12 short-term EMA as well, and this resistance range, 42,005 down to roughly 41,009. Call it 42,000 flat if you want, because the 200-day EMA is right there. The bears still remain in full short-term control. This is a very healthy bounce by the Dow Jones bulls, roughly a 618 retracement to the top of the candles. So the bulls do have more chances than not of being able to reset into a daily uptrend. We will see. Were they able to set the daily higher lows today or not? Take a look at the hourly time frames. We definitely lost the hourly time frame, but if they're able to recapture quickly, well, your daily higher lows are set, and you might just be looking for another daily leg of expansion, maybe a two-step process to reclaim this resistance. Reclaiming of the resistance range would be the best case scenario, because if they cannot do it and roll over, we're coming right back down to where we just came out of 41.3 down to roughly 40,500, as your weekly bears still remain in full control of this weekly downtrend. Any considerable bounce and daily uptrend follow through, I'll remind you on all of these charts, for the most part, just looking for lower highs, depending on the size of the bounce on the weekly. That'll give you the idea whether we're ready to move towards new all-time highs, or if the uncertainty is just too much for these markets, results in the cat dying, right? And we possibly just roll over altogether. Now, let's go through some of our minor sectors, which we do once per week. So a lot of these are more defensive sectors, of course, which has been the narrative as of recently, a pivot from growth to kind of value. So the first value sector, namely, is consumer staples, XLP. That being said, we came out of a very considerable weekly downtrend right here. Yeah, bouncing out of support 78.34 to 76.13. And now you're possibly looking for the retest. The weekly bulls need to hold this support range. The higher lows are down here. You're looking for a potential trend expansion. It's been a rough last week and a half for consumer staples as names like Walmart and Costco continue to consolidate. But overall, I would say that consolidation above the most recent all-time high section is not too bad overall. We could be looking for some swing trades if we revisit the 78 to 76 range in some of your favorite consumer staples names. Moving down to utilities, another very defensive sector in the eyes of the storm, as we usually say, right? Weekly uptrend is now being maintained with somewhat equal lows, bouncing out of support. I've been saying it for a while. If you're looking to play the XLU, not a bad proposition, 76.21 to 72.20. That roughly $4 range. Why? It is the previous all-time highs from 2022. The monthly bulls remain in full control, looking for the higher lows, looking for possible expansion. We know that Wall Street loves to pivot from growth to utilities when there's some concerns about the economy. Usually the utilities sector does perform quite well due to its defensive nature in the face of a growth and consumer recession. And a lot of these companies, even the index, pays a very healthy dividend. So if that's for you, just look for this lower end of the range to get the best possible price, but still not a bad purchase right here towards the lower end of the range. Moving into real estate right now as well. Real estate has been one sector that I've been paying close attention to because of course, if the Fed chooses to pivot and cut rates faster than normal because the economy is dwindling, well, real estate won't do too well initially, but then after it really will. So right now, what's going to happen is we're still looking for the basing effects of the monthly higher lows, trying desperately to go for that monthly expansion. This sector as well pays a very healthy dividend of 3.22% on the ETF. Some companies pay more, and I have a few plays for you at the end of the video as well. If you're interested in the real estate sector, just looking for a weekly higher low for possible further trend continuation. Is it a good, decent idea to be playing with some longs in this area? Yeah, it's not too bad, guys, but keep in mind if the economy unwinds, utility is more of a safer bet, at least initially, than real estate is, because even in bear markets, the real estate index can come down quite aggressively. So you need to be a little bit patient and a little bit light on your position sizing as well if you're looking to build one of those. And lastly, energy. So energy has been performing quite well over the past 2 weeks. We are still trapped though, guys. I wouldn't say the price action is very clear. Even if you look on the monthly time frame, yeah, still trapped in roughly a how long? 3 years, guys. 3 years worth of a, consolidation range, which does look good for some possible expansion. I'll remind you guys, right? Oil seasonality is now positive. The areas from March through roughly June is a good period for oil stocks and the oil index as a whole, as the demand for oil picks up with more people going on vacation, kids start to get out from school, people using their cars a lot more, airline travel as well. And a big one is, of course, in the Northern Hemisphere, the agriculture season is going to be starting as well. That's a very big suite of catalysts for the cyclicality of the oil market. So if you're looking to play oil companies, I've been holding off, right, the whole time since the fall when you get weak seasonality into right now. Not a bad play altogether if you're looking for the expansion. If you cannot pick your favorite oil company, maybe you go with the entire ETF, and the ETF does as well pay a 3.09% dividend. That is everything for your short-term recap of all our major and minor sectors. Hopefully you enjoyed that. Moving on to the VIX right now. The VIX continues to decline. And I always said, guys, when we were back here, when the VIX is high, it's time to buy. Yes, can the VIX go higher? Sure, but it will still be time to buy. You look historically, whenever we pop in the $30 range, or roughly 30-point range, because these aren't dollars, right? It is usually always a good proposition to be buying that fear and buying that volatility, but you got to go small and pace yourself. Right now, we're seeing a nice down swing back on the VIX as the volatility kind of subsides, especially after the last few weeks. But the volatility could pick back up the week of April 2nd when we get those infamous reciprocal tariffs. We'll keep an eye on this one day at a time. When the VIX pops as well, fantastic for selling options, especially selling puts under the market. Moving on to the yields right now. So yields today, a little bit of an uptick, but I wouldn't say we've moved at all in the last 3 weeks. The clearest time frame is the weekly, in my opinion, on the 10 and 20-year yields. You're looking for the weekly big rollover here, engulfing move, lower high and possibly the lower low, triggering the first weekly downtrend in a very long time. And the same thing on the 20-year yields. you're looking for a weekly lower high into resistance on the 20, which is 468, up to about 4.75. Looking for some resistance to come into play, and you're looking for those bears to really start smashing those yields to the downside, which should be bullish for the TLTs overall. We're looking for the inverse here. Inverse head and shoulders play into resistance on the TLTs, 94 up to 96. I've been saying this for a long time, guys. It's a very complex trade. It moves very slow. So you have to give yourself some time if you're playing this industry as a whole, namely the bonds, either short-term or long-term bonds overall. Gold today having a little bit of a pullback. I was saying be very careful buying gold into daily overbought conditions at the top end of a 8-9 day rally in a row. You're really keen on waiting for a pullback, and today we did get that pullback. If you get more of a pullback between, let's say, 29.75 and 29.25, that is going to be looking for a daily higher low for possible further trend continuation. That is the move that I'm personally waiting for any possible swing trades in gold overall. I do not like buying the highs. If we see some further consolidation as people take profits from this very large move overall, I might just be sitting here with some orders, guys. 29.50 is probably the sweetest spot in that sweet spot range. And now moving on to Bitcoin before we do big tech. Well, Bitcoin tried desperately to pull up, but unfortunately just came down, getting rejected once again. 87,000 up to about 92.5 is that huge prior support range, which now has unfortunately turned into resistance, and it will remain resistance as well, trading below the 200-day EMA, which is about 85,500. You can see how much of a struggle it's been to really break above and close above that 200 EMA. And even if we do it, we're coming into big horizontal resistance too. Who's in control right now? Definitely still the weekly bears, looking for a possible lower high. And if the markets continue being very weak and not favoring the growth and risk assets, well, you can assume that Bitcoin might just be heading for its last and final leg, potentially in the short term, down to about 73,000 to about 67. That is where I would like to position. There's no real long trades right now, guys. The long trades only come if the bulls can engulf this location, use it as support, and then we start to rally, right? You'd be looking for the breakout retest area for some possible longs. Longs are not good right now. They can work, but it's never good, guys, to take longs into this huge area of resistance. Not a very logical trade, in my opinion, which is why I'd be more keen on being patient down to the lower 70s for longs or the breakout retest long for the run thereafter. And that is synonymous with the rest of crypto, guys. I don't cover the rest of crypto much because it all starts with Bitcoin. And if Bitcoin does not at least have a weekly uptrend, how do you want the money to rotate into the rest of the altcoins? So just keep an eye on Bitcoin, guys. It is your lead cryptocurrency for a reason. Now let's move into big tech, shall we? All right, so taking a look at Apple. Apple with an absolutely monster move today. A lot of it came in the last hour of the day. I was telling you guys, short covering, people unwinding their puts, and also index rebalancing. Top to bottom, from the open this morning, you are talking about a 3.3% move on Apple. That is absolutely massive in my humble opinion overall. That being said, Apple is still dealing with a bit of resistance here, 225 down to about 215. Now, they did break it to the downside this week, and it now becomes resistance, right? The weekly time frame is still struggling right now, as we do remain in a weekly downtrend for Apple. Any bounce, in my opinion, will just be for a lower high. If they cannot clear 225, look out below. We may just revisit the lows or even lower. My favorite entry for Apple right now remains about 200 down to 195, because Apple right now, the valuation is a little bit high, almost a 3 peg at 220. 30 on a forward price to earnings ratio. When you're only growing revenue 5% per year, those buybacks are good, but can only go so far, right? Apple's been plagued recently with some lackluster performance in their AI rollout, and also the fact that their flagship product, the iPhone 16, is projected to only generate sales growth of about 2% per year instead of the 5% earlier guidance from Apple. So even though it does appear as the bulls are trying to gain some momentum here, the short-term bears are still largely in control of this chart, and the 200 EMA stays put at that 225. We will see how high the bulls can get on this bounce before reevaluating whether or not they can recapture this area and go for highs, or if the bounce is too weak for the rollover. And as it stands right now, the bounce is still very weak, guys, only a 25% bounce. Not my favorite trading opportunity out there. Moving on to AMD right now. AMD down 0.65%, but still not losing much ground over the course of the day today. I'll remind you, the daily bulls remain in control. Actually, It's crazy for me to say that, right? Because we're not used to saying it. They haven't had control for a very long time on AMD, but now they do. Daily uptrend is set right now. Any move lower is looking for a higher low. Anything above 97.26 looking for a higher low for possible further trend continuation, right? It is good. We have now reclaimed something we have not done in a very long time, which is maintaining above the short-term moving average, the 12 EMA, and slightly above the 26. We have not had the 26, guys, for how long? For a very long time on AMD. You would have to go all the way back here pretty much to October to see when we actually had both of those moving averages. Now, you can argue that we don't have them by very much, but AMD holders will take all they can get at this point. On the weekly, though, the weekly still remains in full control of the bears. Sweeping weekly downtrend still remains well in place right now. Your lower high is set at 116.46. Your 200-day EMA is right around there as well. But this is a decent sized weekly bounce for now, right? The bulls can possibly get a little bit more on this. It is currently right now a 0.618 bounce. So even if we lose the start of this move, they have a chance, guys. They have a chance of resetting a higher low and going for a weekly trend change. If for ever which reason the next few weeks you see a weekly trend change on AMD, you know that your monthly higher lows are set and you are possibly going, or not higher lows, but the monthly lows, because it's a downtrend, right? Monthly lows are set. Might be looking for some expansion, but that expansion may not go very far because the next big area of resistance is 120 to about 130. The fundamental thesis on AMD right now is that their earnings and revenue are going like this, expanding exponentially to the upside, very good growth, very cheap valuation overall, profit margins improving too. And if you look at the forecasts here, you can see what I mean. Ever expanding EPS, some of the best years in the company's history are definitely ahead of it as they garner a little bit of market share away from AMD. We're not talking about much, guys. 5 to 10% over the next few years is nothing crazy, and that's kind of what we're pricing in for our thesis. I still think it's one of the best risk to reward trades on the market right now, but keep in mind, there's always a risk for that reward as well. Moving on to Amazon. Amazon up 0.65% today. Amazon trying its best to play defense, guys. A lot of these charts, you can see the MACD is now curling. This is roughly a month plus of negative momentum from this entire downslide, which is normal, right? And now we're getting a little bit of bullish cross at the right location too, into support. 195 down to about 185 is the support range for the bulls. Prior resistance highs, now newfound support, 50 EMA as well. And after 6-7 weeks of pure downside after their earnings, maybe we're looking for a bit of a bounce, but it all starts here first on the daily time frame. You need to get a daily uptrend going. So this bounce recently has been very nice. I need to see a bit more of an engulfing move. Give me a daily uptrend, and then we could talk about how much of this weekly move are the bulls able to recapture. You need to see a 50 or 60% retracement to give the bulls the best odds of making a move towards the all-time highs. If the bounce is too shallow, meaning if the daily uptrend only lasts up till here until we lose it, well, if you look on the chart, guys, if I put this on the weekly, right, how much would that be? That would be like a very weak 30% bounce. It gives the bears more than enough opportunity to roll this back over to the resistance lows support lows, or possibly lower. Amazon's still one of my favorite companies, guys, especially if you're looking to build a long-term portfolio. Anywhere in this area is a buy. It's a buy the entire way down and a little bit more heavy if ever we come down into the 170 to 160. Forward PEG ratio is a 1.5, very cheap, and a cheap forward price to earnings too. Moving on to Google right now, up about 0.73%. Google also, right? Look at the cross on the daily MACD after 1 month plus of negative momentum. But as Amazon, it all starts on the daily time frame, right? We know the bears have been in full control of this chart. We have a nice bounce underway right now, but the bounce means nothing if you cannot confirm a daily uptrend. It's a good thing, though, the bulls are holding on to this area of support. 175 down to about 163 is that range. You can see it's congestion right here. It may not be too clear, but you put it on the monthly time frame, it becomes a lot more clear, right? The monthly candles all closed in this region, and it's very tough to push in and out of that location as well. The next support zone below us, in the event we somehow just flush from here, because that's always a possibility, is all the way down there, 154 to 140. So if we do get the daily uptrend, that is step number one. And then you need to look on the weekly. Okay, now that we have the daily uptrend, how high does the weekly bounce get before we start rolling over? Yeah, so one step at a time. We'll watch the daily uptrends first at 165. Great buying proposition. It's a 1.2 peg, an 18.5 forward price to earnings. The company is trading very cheap. Moving on to Meta. Give me a second. Haven't done one of those in a while, guys, so I had to bring it back, right? The infamous coffee sip used to be on Google, now I guess it's on Meta. Meta, same concept. Daily bears are in full control of this chart. That is clear as day right now. The lower highs are set right here, 612.6. Now the bounce is trying to get underway, but we know the bounce, guys, is only step one. Confirm a daily uptrend, and then we can talk about the bull's capacity to set some weekly lows and go for possible expansion here. Try to get back this weekly uptrend, but that is a long way away from Meta bulls right now, bouncing out of support 598, let's call it 600 psychological, to about 566. This whole 5% range, big prior congestion there, support for the bulls. 200 EMA is lodged in there as well. So we'll take this one day at a time, but also notice the MACD, not quite crossing as much as Amazon and Google, but close. You can clearly see there's starting to be a shift in momentum trend as the bears are not able to push it down as fast and abrupt as they were back then. Now it's a big battle to protect this level. We'll see if Meta has it in them to push a little bit higher. Overhead resistance stays put 618 up to 633, the top end of that resistance range back there. Not looking too bad though. Moving on to Microsoft, up 1.14%. Look at this move on Microsoft. Look at this rebalancing move, right? Apple, Amazon didn't get too much of it. It tried, but didn't get too much of it. Google got a little bit of a rebalancing and shorts being closed and puts being taken off. Microsoft, arguably one of the better bounces into the end of the day. Look at this bounce on Microsoft in the last 10 minutes, guys. 10 minutes of the day, big move, 1.6%. It was negative all day until those last 10 minutes. What is Microsoft trying to do? Trying to go for the daily uptrend shift. The MACD cross has already happened as we've bounced out of the support range. Support range below us, I'll remind you, is 378 down to roughly 365. This little tiny area from back there. However, don't celebrate too early. We're coming into resistance very quickly. All of that support now becomes big resistance for your bulls. 408 down to 393. We'll keep an eye. If Microsoft can set the daily uptrend, you would need a break of 392 to the upside to confirm a new daily uptrend and say that a weekly bounce is underway. Then we measure the size of the bounce in relation to this guy right here, which is 419. This little top of the candle right there, need to see at least a 50% retracement or more to give the bulls a chance of resetting, getting a back above this resistance range, which then would be into support for the good old breakout of a range, retest, and then maybe run. That could be a decent proposition for some swing trade longs. As of right now, fantastic area to be adding Microsoft into a long-term portfolio slowly, but it's such a fantastic company, guys. I mean, even in the context of bear markets, right? It can go down, but I mean, look, the last bear market we had was 2022. Did they drop EPS? No. Did they drop revenue? No. Everything is just really stable, persistent, and up and to the right. Moving on to Netflix right now. So Netflix also up 1% today. Not too bad of a showing by them. Nice little daily uptrend right now on Netflix, right? The higher lows are now set. 917 is the new higher low. So if we keep pushing, perfect. Daily uptrend remains intact. But if we come lower, keep an eye on this because no new highs and a break of this guy would be a daily downtrend. As of right now, I will gladly change this resistance box, which was red, into green because they closed the weekly candle above it. So now this range below us becomes support once more. So congratulations to the bulls for doing that. And that range, of course, is 935 to 896. But after such a large retracement down, guys, there may be some concerns. How can the bulls actually V-shape this? When you're talking logically about a 80% retracement down, normally the expected move is not a full V-shape. If anything, they are going to do it in 2 shots after an accumulation phase and then possibly ramp. The worst case scenario is if the markets unwind once again after that tariff week, you may just get a lower high, and then the bears are going to try to go for the weekly downtrend. At that point, you'd be looking for levels down here in the 825 range. Netflix, fantastic company at 950. Valuation is not the cheapest, but it's also not incredibly expensive. If we're holding shares from all the way back here or prior, I see no reason to sell this company at all. But adding up here, if I had to start a position on Netflix for a brand new portfolio or something like that, sure, but you have to go small because you're not getting the best deal out there, let's be honest. Moving on to NVIDIA, down 0.7%, but even NVIDIA got a little bit of that end of day rally in the last 10-15 minutes. Bottom to top move, almost 1%. So not the moves you're used to seeing on NVIDIA back here, where it could do that, it can do a 6% move in 10 minutes, but still, not a bad move. Got to give it to him, yeah? Who's in control here? Well, the daily bears remain in full control. Lower highs are set right now. This was a very decent bounce, guys. Objectively speaking, right? This bounce on NVIDIA, one of the better ones across tech. A 0.618 bounce, very decent, right at or around the 200-day EMA. So what the bulls are looking for right now, they're trying to set the higher lows, guys. Trying to set the higher lows and go for the daily uptrend. The only problem is there's big resistance ahead of us. 125 up to 134, let's call it. Huge zone, yeah? Big resistance there. Support that entire time. And now it's going to be a challenge for the bulls to really break through this in one clean shot. Maybe a multiple step process if we get some rekindling of bullish action. But if you just get into there, roll over the daily downtrend, right? Well, then you know what you're looking for here, guys. You're just looking for a weekly lower high for possibly a retest of the lows. Support stays put, 112 down to 101. I'm a big fan, if we make our way back into there, of buying this company. Such a fantastic company, growing well. 1.1 on a forward PEG ratio. Forward price to earnings is a 25. Very cheap for NVIDIA, the cheapest it's been in a very long time. Moving on to Tesla right now. Tesla up 5.27%. So now the last two candle closes on the weekly show that there are some bulls that want to defend this location right above support 220 down to roughly 190. We will see how far they get, because even though the daily is not looking terrible, right? It is currently trying to go for a daily uptrend that would be a breaking close above 250. We are almost there. Couple dollars away from a new daily uptrend. The only problem is that you're having heavy resistance right above you, right? 300 down to roughly 260. It's always been a big area, guys. Resistance, resistance, resistance for the bulls, support, and then resistance back there. A very large level for the bulls to break. And the weekly, who's in control? The bears, right? If they cannot get it done and this daily uptrend gets stopped in its tracks in this resistance range and rolls over, on the weekly, guys, even if you get as high as 300, keep in mind, right, before rolling over, keep in mind that would only be a 38.2% bounce. It gives the bears a great chance of revisiting the lows or maybe even lower. So keep that in mind. We'll keep an eye on this one day at a time. This is why I'm saying don't get ahead of yourselves, right? In any swing trades that you may have tried to pick the lows on, this is resistance. You may consider taking profit on those short-term swing trades, as the longer-term bears are still well in control of this chart. And we know that Tesla has been plagued recently with a lot of negative headlines in terms of global auto sales, vandalism and whatnot, criticisms that Elon Musk is not spending enough time on the brand in quest of his political endeavors, of course. So take from that what you will, but we do see a clear trying of, a clear bottoming out process right now, at least after this massive short-term downswing momentum. Moving on to Palantir, very healthy day for them, 4% to the upside, and they did what we were saying that they might do yesterday, right? Which was we were looking for the daily uptrend break, would have been a break above 88, and we did break and close above 88. So now short-term bulls are back in control with the daily uptrend. Support remains planted at 84 down to about $77, and the weekly was never lost. This is the difference, right? Weekly higher lows are now set with the recapture of the daily uptrend. Your higher lows are now set 74.62. Let's call it 75 psychological, yeah. And maybe we're just looking for a little bit of a leg of expansion overall. I can't say there's much resistance ahead of us except for this guy right here, 92, because you can see not much was set, right? Unless you count the post-earnings gap, $100 psychological. That's probably the next target for Palantir, in my opinion, the $100 psychological area of resistance. But we'll see. Are the bulls able to put in new all-time highs after a 80% retracement? Probably not in one clean shot. If they're going to do it, they might just do it in two steps. But guys, we may just be due for some extended consolidation. If the indexes are struggling as well, guys, you can't really expect Palantir to just pull a rabbit out of its hat and go break the all-time highs if the SPY and the QQQ are not able to put in some weekly bounces of their own. But all in all, not looking bad, guys. On Palantir, not looking bad at all. Short-term bulls are back in control, and the weekly bulls never really lost it. It's just the retracement size was very deep. So I'd be wary and expecting, if you're calling for Palantir 150 in the next 2 weeks, you might be a little bit disappointed. Moving on to SOFI lastly. SOFI also bouncing out of its support range on the weekly, which was 1172 down to 946. I was saying I really like this area for some swing trade buys or selling some put options, and so far it's been bearing fruit, right? Now moving on, daily uptrend is confirmed at this point. Higher lows 11.81. So any break lower from here, looking for a higher low. And if we maintain this daily uptrend all the way into resistance, which is roughly, you know, these guys right here, yeah, 14 up to about $16. It's been resistance. It was prior support after the IPO. Now it's going to be resistance again. If you can bounce there, just remind yourselves who's in control, yeah? Weekly downtrend, you're looking for a bounce. If we get up to at least 14, it will be a decent size bounce, all things considered, about a 50% retracement size. So even if you get rejected there on your first test, the bulls do have a chance here at resetting into a weekly uptrend for a two-stage process. So far, though, if we lose this in a big way, you lose this daily uptrend here, right? On the weekly, that would only be a 30% bounce. The likelihood of retesting the lows or lower is very high. I still remain very firm. I do like buying SOFI, but I'm being very patient. If we can find an 11 handle all the way down to 9 again, I'll be another fan of buying SOFI for some swing trades again. And that is all your recap of your indexes and your big tech names. Now let's dive into some of the swing trades that I've been talking about for the past 2 weeks. All right, so we're going to go through this list very quickly because there's a lot of names to go through, but just a quick update, yeah? So moving on to Uber, I was saying that Uber was a very nice swing trade attempt in the lower 72, 71 area, looking for the weekly uptrend continuation out of support. The trade is currently playing out very nicely, and the next resistance range is $77 to $80. That would be the take profit exit, but Uber moving very nicely, and the valuation, even at 75, is still quite manageable. It's just above a one peg, very, very nice price action movement from Uber. Grab still remains slightly muted. One of its, well, not competitors, but Uber has a stake in this company. We know that Grab has moved well since the end of October, and I'm still looking for a possible retest down here on the monthly timeframes. You got one this month, but it wasn't by much, yeah? So we're looking for a retest of the lower 4s. A 4 would provide a decent entry. It didn't quite tap into there yet until, well, unless you got a nice entry last week. But now, if ever we get some weakness here and dive into the 4s again, I think it's a decent swing trade position for the near-term future for our ride-sharing and food delivery services. Moving on to some other beaten down stocks, Elf Beauty. I still love Elf Beauty down here, guys. Even though we don't have the weekly trend, even though we do not have the monthly trend either, there is some basing effects starting to form right now, yeah? In the lower $65 to roughly $55 range. Most of the selling and de-risking of the stock has been happening as of late. I love this one either to play short puts under the market or accumulating some shares. I'll remind you the thesis says the company has a lot of pricing power and the valuation right now is very cheap, right? Keep in mind, tariffs from China are on the import price. Elf Beauty imports these products. They sell these products from anywhere between $6 to $15. They import them probably for just a few bucks. The tariff is on the import price. So let's say they get upcharged on their $3 lip gloss that they import that they sell for $9. Let's say they get charged 20%. What is that? 60 cents? What are they going to do? Put their lip gloss from $9 to $9.60? All their competitors' products are selling for $20, $25. You think people are still going to buy Elf, especially when discretionary income is front and center? Probably not. That's the thesis here. That's number one, pricing power, loyalty to the brand as well, and very, very good social media marketing to the younger demographic. Price to sales, very cheap. Forward price to earnings, very cheap. And the PEG ratio as well, extremely cheap. Still one of my favorite plays. It may take a while, guys, to turn around, but I mean, we're in support. We're weekly oversold. The valuation is very cheap. What more can you want to accumulate some shares if you like this company? Swing trade number 2 was Nike. I was waiting for their earnings, guys. And Nike unfortunately broke down below. So this one, I didn't buy any shares just yet. But as I was saying in yesterday when we covered their earnings, between here, right, the high 60s and the $50 range, like 59, 55, decent area to be accumulating some shares. If you have a long duration time horizon talking about the next 6, 12, 18 months, and you want to give the company a chance to turn itself around and become the Nike that we all remember. I highlighted a lot of concerns and the business model and plan moving forward in yesterday's earnings on the channel. If you didn't have time to check that out, check yesterday's video. It's towards the midpoint mark. The timestamps are always in my descriptions, so take a look at more details there if you want more information on Nike. And lastly, UPS. UPS coming down after the FedEx earnings. FedEx, once again, they had good earnings, guys, but it's the guidance. They said macro uncertainty, tariffs. They said all the keywords, and the stock was down like 8% today, yeah? UPS, I still remain a very big fan. even though it's a cyclical company in the midst of a turnaround project as well. 110 down to 100. The stock right now pays roughly a 5.51 dividend. This, if you're a dividend investor and have a longer term time horizon, not a bad deal as well. And if we get some continued volatility to the downside, you may even see me try and write some short puts below 110. Think 110 down to the $100 range. That is my sweet spot for picking up UPS into huge area of support, guys. This is literally what, 2014 all the way back to like 2020 down to $100. The bears are not going to be able to get through this area very easily, so I still think it's a very nice area of accumulation. Moving on to one of the semiconductor stocks, TSM. TSM as well, guys. Basing effect area for this stock. MACD is now crossing. We were calling it out the past 2 weeks. This was a very nice buying opportunity, and so it resumes, right? Daily uptrend is nice right now, looking kind of like big tech, right? Even though it's a weekly downtrend, looking for a lower high. The swing trade entry was here, and we were looking for take profits in the 185 to 195 range. So far, the stock is moving well, and even for a long-term portfolio, fantastic. Look at the valuation. Can't complain with that when TSM is growing so well, and when the fundamentals of the business, at least for the next few years, I mean, they're always very good, but for the next few years, they'll be exceptionally good, both for EPS expansion and revenue expansion as well. Now, moving into some of the financial plays, right? Financial plays. SPGI highlighted this one a few weeks ago, coming into big support down here, 482 to 458. I was saying this is a very good time to go shopping, retest of the 2021 highs, and the bottom end of support for the last roughly 6 months. Decent time, couple that with daily oversold. That was a very nice swing trade entry. Hopefully you guys are able to get a piece of that. Moody's Corporation, same concept, daily oversold conditions, now back into the support range overall. And similarly, right, we were looking for a weekly close to be protected. It always was protected, looking for a little bit of a swing trade. Now the stop losses can be moved to break-even levels wherever they are. And you're looking for a little bit more in terms of trend expansion, but even for a long-term portfolio, it's fantastic. Don't take it from me. Warren Buffett holds it in his own suite of Berkshire funds. Moving on, next one was FICO. Same reason, basing effects of the levels right here. If you're looking to participate in FICO, it was a very decent entry point, and we're looking maybe for some weekly expansion levels. The company is doing very well fundamentally, and on a technical basis, it was not looking too bad. Same concept for BlackRock. BlackRock as well came into a very nice support range. Hot on the RSI. Daily oversold for BlackRock. That does not happen too often. Reclaim of the 200-day EMA and a very nice, almost all but engulfing move. Looking for the daily trend expansion. 200 EMA is support. Even now for an entry, guys, on BlackRock, not too bad at all. And I'll remind you, that is also the 2021 highs. The secret is on these monthly timeframes. Looking for the monthly higher lows for possible further trend continuation. Looking very good there. Another one we were looking at was Brookfield. So Brookfield too, same concept, right? Monthlies, always look at the monthlies, guys. Higher lows into 2021 highs. Couple that with the fact that BN was in oversold conditions. You saw me play that one by the intermediary of short puts. Very attractive bounce for anybody who took that trade when I first brought it up a few weeks ago, guys. It doesn't look like much, right? But even if you didn't clip the bottoms, right? Still like a 7% move on shares on a company that usually doesn't move that fast. Very healthy. And lastly, American Express, same concept, daily oversold conditions, smashed on the lows right now. Once again, another stock that Warren Buffett holds. Daily uptrend is reclaimed, now back into the support range, 270 to 263. Also just looking for a little bit of weekly uptrend recapture. The take profit area is up here, guys, 285, 290, because then it might take a two-step process to recover, if at all. That is all a whole suite of plays. Visa and MasterCard are not quite ready just yet. I'll remind you, not quite ready, guys. Just look on the monthly timeframes, yeah? 12 EMA, 310 on MasterCard somehow. I know it's very strong, but if I see it again, all the way down here, 320, 310, that's where I want to go shopping on Visa and MasterCard. Moving into Visa right now, or sorry, that was Visa. This is MasterCard. Sorry about that. MasterCard as well. Daily oversold conditions, but it was, close to our range of entry. There was a nibble right there. The best area would be a monthly retest of the 12, which is like 510. So it's almost ready now, guys. Almost ready on MasterCard. Such a fantastic company overall. Toll booth company, as Warren Buffett likes to call them. He also holds MasterCard in the Berkshire suite of portfolios, right? And bouncing out nicely right now. However, not quite just yet. I really want my 510 test of that 200-day EMA. If we see that, I might just go shopping for some myself. Then we had a suite of healthcare players, which was UNH. UNH, we highlighted this one as a very nice swing trade opportunity down here. 480s. It's moving excessively well. And, the question is, 3 years of support. Do you guys think it's going to hold? Probably going to hold, right? So keeping that in mind, UNH was a very nice swing trade coming up into the take profit zone. 525 to roughly 540 is the take profit area. Overhead resistance, that was a very, very nice, smooth and easy healthcare trade. Moving on further, TMO, another healthcare trade that I was looking at, has not left off yet. This is still somewhat of an opportunity. Well, not somewhat, still an opportunity in my mind. Same concept, guys. 3-4 years of a support range. Company has very good fundamentals, so might just be looking for a pop out of that range right now, but we have to go light, even if it's swing trades with shares. Overall, still though, I like this one. Then we had one company which we were monitoring on the value sector for possible re-entry. The re-entry is here. We identified Pepsi here, and we were saying if it comes back down there, most likely a very good level. This is the support highs or resistance highs from back then, from the pandemic, 2020 and 2021. Big support for the bulls once again. Pepsi right now paying a 3.7% dividend overall. Not too bad of an entry proposition in my opinion. If you're looking for some good dividend stocks that have been pulling back hard from their all-time highs, 26% down on Pepsi right now. Then we had a suite of defense players, right? Defense players, GD. I brought this one up a few weeks ago for a decent entry around the weekly 200-week EMA. Now you get the engulfing move. The retest, maybe looking for the run on GD, not looking too bad. Monthly, also a monthly breakout retest and possibly run. Still on the table for a bit of a swing trade right now. 260 down to 250, very good entry. The other one I entered myself today, Lockheed Martin, after Trump gave Boeing an olive branch, literally an olive branch, right? Boeing, the company that seemingly can't do much right at the current time. The negative press against Boeing is very hardcore. The backlog on their orders is very large. They're just not efficient as they once were anymore. Trump handing them an olive branch, a gift, giving them a contract, right? $20 billion to design and manufacture the new suite of U.S. Air Force fighter jets, right? Usually those contracts go to Lockheed Martin. But if you read between the lines, because of what's been happening to Boeing, Boeing is also a big defense contractor. He gave the contract to Boeing, which resulted in a 6% drop on Lockheed Martin. But I mean, an entry is an entry. I'm not going to complain, right? Lockheed Martin has $160 billion of orders in the pipeline. The stock pays a 2.87% dividend, has not lost this trend line in a very long time, and into horizontal support as well. You are also looking for the monthly higher lows, 6 months of selling pressure in a row right now, guys. Into a trend line, into horizontal support. Yes, please, I'll nibble on a bit of Lockheed Martin, also a fantastic company for any long-term portfolio. Then we were looking at a suite of China plays, right? K-Web coming into resistance as predicted at the $39 mark. Weekly uptrend or monthly uptrend is very nice right now. Any retest, guys, of this lower range, you see this resistance right there? Well, it's now going to be support for the bulls, talking about 32 down to roughly $30. If we can find some other entries on China down here, I'm a big fan of playing them both individually, some names like Baba, right? If Baba retest down here, 126 down to 115, same concept, prior resistance for a long time, retest, all the moving averages are sitting there as well. Decent chance for Baba. And this one has been a big winner, guys, for myself and the Discord. I was saying that, BYDDF, I did the analysis on BYDDF, but you can buy BYDDY. We took a look at this one a while ago when I was saying I was going to swap some Tesla for that. It gave us the retest entry around $43 roughly. That's where a lot of us entered in the Discord. And now we're up a decent amount. Just looking for some expansion here after consolidation for so long. If it comes back down there, guys, no problem. I'll just build more for my long-term portfolio. Also a stock that Warren Buffett owns, also a company that manufactures EV at a net profit margin for every single car sold. They have a tremendous electronics business as well. Not many people know they are officially licensed OEM manufacturer for Apple's iPads, and they have an absolutely massive battery company as well. So this company has a lot of different arms to its business, a very well-rounded business, and their EVs are very nice in terms of features and designs, in my humble opinion at least. Those were some of the China trades we were looking at. CrowdStrike, cybersecurity names, right? Cybersecurity, what were we looking for? Monthly higher lows for possible uptrend continuation. We were taking a look at CrowdStrike. I brought it up a few weeks ago at this point into daily oversold conditions. was saying that one of two things, right? Either look down here for more oversold, or if we recapture this level right there, decent area, guys. And as a matter of fact, it was option number 2, yeah? Recapture the weekly. The entry is in or around here. And now you're just looking for some expansion back into the highs. That was a very decent portfolio add, or even for some swing shares, longer duration swing shares. Palo Alto Networks didn't quite make it to our area. I wanted a bit more down here, 170 to 160. Did not quite make it, but Palo Alto is very, very, very solid, guys. I'll still be shopping down here if they come down here, but no trade on that one for me just yet. CRM is another SaaS player that I was looking at. Didn't quite make it into my level. I'm very picky. 265 down to about 240 was the monthly retest that we were looking for. Didn't quite get it, but the bulls trying to find a base. If they cannot do it and come even lower, and we revisit oversold conditions, the area is right there. Come down and pick me up. I'll throw a few shares or some call debit spreads at this one, depending how you want to play it. And then we're looking at Walmart and Costco, right? Still no trades on Walmart and Costco for me. They've been trying to find a base of support around their 200-day EMA, but still no trade. Walmart for me has ran an absolute ton. I'll be looking for roughly between the $80 and $70 range. It's now pulling back though on the monthly timeframes out of overbought RSI, but I need to see more consolidation on Walmart. And Costco for me remains a solid buy. This is the first entry area for a long-term portfolio. Bit of a nibble though. Costco's not cheap, but a bit of a nibble here is what we were looking for. It came down into us over the last couple of weeks of trade, below the 200 EMA, daily oversold. Not a bad time for a swing trade. Even entry here, stops go below the low, and you're targeting roughly the EMAs, right? 950, not that bad for a swing trade, but even a small first add for a long-term portfolio. I know it's not cheap, guys, but the company's loyalty factor for its customers is extremely high. And if you really want the absolute entry for Costco, you really need to look at the quarterly charts, which I very rarely bring up. When you're talking about a big market correction, a possible bear market, yeah. Can we enter a bit here? Sure, but nibble. The actual opportunity I want is 700, but I'm not sure we're going to get it, guys. But that would be a logical move by Costco, as it always does, pull back eventually into the quarterly EMAs every so often, every few years, as a matter of fact. So keep that in mind. And lastly, because yes, this is lastly, there's like 15, 20 plays right there, yeah? Oh, some of the real estate players. Oh, Realty Income Corporation. Down here, support. 52 down to 49. Well, we're still being patient on it, looking for maybe a retest of that range. Haven't got it, but since the time we were pointing it out, it was here the first time I brought it up. I said, be patient, let the market come to you. Well, now you know if it comes down to you, you might get a chance. This is now paying almost a 6% yield. And Vici as well, guys. Vici, if you like this company, I was saying back up here, I was saying, be patient, let the market come to you, wait for the retest 31 down to 30 bucks. Seems as though we might be getting it sooner than later. Retest of that range, very decent support range overall. At least it was a few times in the past. Resistance, you can see the bulls always struggle. This is a fair value gap as well, so not too bad there. 31 down to 30, decent entry on Vici, 5.34% dividend yield. And that is everything for all of these swing trades that I've been bringing up, right? There may have been some that have slipped through the cracks, but I think that's enough across all industries overall. Hopefully you enjoyed that. Now let's dive into my portfolio and see the trades that we made in the Discord this week and which ones I have in my portfolios. All right, so before we get into the positions that I still have, let's go over a few of the ones that we were profitable on and closed this week. Wheel trades, 5 wins, and Amazon beautiful 180 put, which you got for $4.30. Showed you that one earlier on the week. Closed for $3, 30% win in one day, but anyone who was still holding that one, a few of our members closed it for $2, 50% in just a few short days. That's what I like to do. When stocks get big bad days, 3%, 3.5% on the big tech companies. I love to place short puts under the market at very attractive strike prices. Did the same for NVIDIA. This was on the top 5 options list last Sunday's video. 57 cents down to 25 cents. 56% win in one day, but if you held it through the end of the week, it would have been a 100% win. SOFI as well, $11 puts. This was a roll from a week prior. 45-cent total credit, closed that for 5 cents. About a 90% win on that one. Brookfield as well. You guys saw me use that one, for the past few weeks. $1.20 down to 30 cents, 75% win on that one overall. Held to the end of the week, would have been a 100% win too. Just depends if you want to close them early and repurpose the capital or hold them into expiry. Either or are good as long as you're getting good ROI per day. And lastly, Toast. Toast got this one last Thursday, 29 put for 18 cents. Closed early on in the week, for 4 cents for a 78% win. That was very good. In terms of directional plays, we had some SVXY. This is inverse of the VIX when VIX was 28.5. We went into this one and we were able to make a decent little 5.2% ROI in this past week of trading as the VIX did come down. Then we had some call debit spreads that expired worthless, unfortunately. We lost all the capital here. It was a very small position. We opened this one in December, rode it all the way through expiry. Unfortunately, Microsoft never came back. And Oxy, you may remember this one from last September. I opened the first contract on this one. This last call, I left it as a runner, but it's been worthless for a while, guys. You see it every single week. It's been worthless for like 2 months at this point. I was giving it a chance. What? I was going to close it for 5 cents the whole time? No, right? So unfortunately, we lost this last contract. But in September, right, we closed one for $200 in profit. So even though we lost on this one, the total loss amongst the two was only about 142 bucks. So as you can see, the losses that I usually take are kept very small. I usually always close, if I have multiple contracts of something, I close one at a profit and let the other ones ride, especially if it's going to be, either you slightly loss or could have ended up in a double winner. But this one, unfortunately, we took a loss. Overall, not a bad week for closed positions. We had some nice reductions in our average costs as well, which I'll show you in the positions right now. Moving on to the positions page, well, you can see I still have the AMD calls. Still working on them. Still the Amazon shares. Amazon shares is actually a new position that I built earlier this week. Got in for about 194.79. I built so many swing trade share positions, guys. If you see in the summary here, I've built around $15,000 in just pure share positions over the last week or two in only very solid companies. So you'll see a lot of just pure shares as I want to acquire ownership in these companies at low levels. Now, these swing shares will eventually be cut because this is not a long-term portfolio, but I like to build a base of shares right now, especially when the options market is kind of topsy-turvy, especially for, shorter or longer duration swing trades in either direction. I'm still playing the wheel strategy, selling puts every single week, but with those premiums that I acquire, with the profits that I've made, in the last quarter of last year and early in this year, I've just reinvested those profits in a very solid company's shares. Not too much for this account, but still, every little bit is, incrementally better overall. We have the Amazon bull call debit spread for May. I'll keep that one as a swing trade. It's basically at break even right now. AMZU, this we got assigned at $41.58. I did one little covered call on it under my strike. If you want to check my actual cost basis here, you'll see the cost basis is 39.06. If Amazon has a rally, I'll write more covered calls. Not too worried about it. It's a very small position for me. ARCG, we round tripped a lot of the gains on ARCG. Never took profit because our contracts are for way far out. We'll see, but we were up like almost a 2x here, and now we've round tripped everything, unfortunately. I'll leave that one there. Both positions are for well in the future, so I'm not too worried just yet, even though we're down. Very small positions. American Express, another company I built at the lows, entry of 265. They're now 270, so we're up slightly on this one, but still, I like to keep that one. A call debit spread, which will cut even sooner. April 25th. We're currently down on that one right now, but if AXP puts in another good week for us, we might be able to close this one at a profit. Elf Beauty assigned at 71 a few weeks back, as a matter of fact. I've been rolling covered calls under my assignment price, and I've done so well collecting premium on Elf a few different times at a few different strikes. Now our cost basis on those shares is 60.69. So at a profit right now, and I'll continue to roll these covered calls if I can into the future. That is the logic on Elf Beauty. ETHU, this is we got assigned on Ethereum when it was about $2,700. I'll hold this one, guys. 200 shares. Our average cost right now on those shares is a bit higher right now at 453. So we're down. Obviously, we're down on that trade by like 53%. It's less because that's not our true average cost. But still, you know what I mean? If it comes up a bit higher, I'll write some covered calls, but we'll just hold this one, I guess, for a longer duration swing trade. The whole position size is like 900 bucks, right? At the average cost of 453. So I'm not too worried for 200 shares. Yeah. FICO, another solid company swing trade, 1796 entry, currently moving up higher right now, up about 3%. Not the biggest win, right? But it's still buying solid companies at good entries can yield overall. When you combine all of them, it could yield some pretty decent gains. Google bull call debit spread for June, it's roughly at, a 34% loss right now, but that's fine. We'll keep it, see what happens. Very small directional play on Google for me. We still have the Google 180 calls right here. This is a broken call debit spread. I took a call debit spread and then we closed the essential long leg to the downside, which was providing us a bit of coverage, either the short leg to the downside. If you want to see it right here, it's a, can I find it? Oh yeah, it's down here. So it's a broken call debit spread. The actual break even is 36.16 because we closed the short call side for a profit of $637. So the actual cost of this leap is 36. So we're not down as much as it says here from 42, but still we're a ways away down on that leap. I'll give Google the best chance it can to recover over the next year's worth of time. Google shares as well, those were assigned at 185. We've been managing the position okay, but we're still underwater, of course. We got assigned at 185. I will DCA that one in the 150s if I can find it. This Google trade, we've done a few covered calls so far. The break even on them is 179 right now, so a bit lower than you can see on the interactive brokers after those covered calls. Grab, we have some covered calls against that position right now too for about 31 cents all the way out in April for 4.5. The average cost on Grab is 432. So even if called away at 450, we're making a profit, but I would like to build on this position in the lower $4 to $3.50 range if I can get an opportunity. Very small first entry into Grab. Intel, this one I actually closed 2 of the call options throughout this past week after the CEO news. One right around here about last week after the news happened, and then one at $5.80 earlier this week as well. So the remaining contract I have is basically free right now, all the way through December 2026. Moving on to ISRG, this is another swing trade position on a highly profitable and almost monopolistic company right now. I didn't get the best entry for my first batch of shares, and I will DCA if it comes down to like 400, 370. I don't know if it's going to happen, guys. Super high quality company. Was just looking for a monthly higher low for further trend continuation. I love this company, so I only threw 2 shares at it. That will be an increasing position over time if it gives me a better price. But I do love this company, and I was waiting for a discount on it. Finally got my discount, so I threw 2 shares at it, and now we'll just manage the DCA process as we move through this year. KWeb as well. I had 5 contracts initially, wound down 3 of them at nice, very nice profits in the last few weeks. Holding on to 2 contracts. If it comes back to 30, I'll add a bit more back. Lockheed Martin is a new pickup from today. We got in at $440. I just showed you that one in the swing trade, so you guys should know by now. 3 shares, initial entry. I'll probably double up this position if I can. Very easy entry. Moody's Corporation, 3 shares as well. Swing trade, also in my swing trade list. Slightly underwater on those right now, but not by much. Meta is also a new swing trade position. I got in at 582 just the other day. We're now up to 597. We're up a little bit on that Meta swing trade. I'll DCA the next portion in the lower 500s, but I like Meta. Want to build a few shares in this account for the end of the year. It's going to be a very choppy year, guys. Usually I do call options on these types of trades, but we know the market's very volatile. You know, every single day there's a new headline and whatnot. So rather than just burning premium on calls, I just want to build some shares as like a small little share swing trade capital amount in this portfolio that I'll just carry through the end of the year while also riding the wheel on a lot of these, on a lot of other companies. MSCI, same concept we got in. This is like a month old at this point, maybe even more, like end of January at 597. We're still underwater on these, but it's fine. Very solid company. It's in line with the Moody's trade, the SPGI trade. We're really just looking for some eventual expansion on this chart, right? Moving on, Microsoft bull call debit spread. That's the loss from the portfolio recap. Yeah, full loss. They've been worthless for a while, guys. So I figured I might as well just keep them. We'll take them for a tax loss. MSFU, $33 puts. We did not get assigned today. I rolled them out until May for an extra $2.10 credit, meaning our total credit right now is about $3.08. That is MSFU at 30 bucks. Very small contract. It's moving well in our direction today. We're already up 15% on this one from the time that I rolled it with that pop in Microsoft in the last 10 minutes of trade. Very happy with the way this one's been moving. We also have some MU call options that I've been keeping. I've had these guys since like August, you know what I mean? And unfortunately now with the earnings, it did not get the pop that I thought it would get. These June 2025s are pretty much done for. I have the June 210s, which is crazy. I know it's crazy, but at the time, the markets were different, right? So these, you know, this one is kind of already lost, but this one, very small positions, guys. They're like lottery trades. These are all lottery trades, yeah? Nike, another earnings trade that I took, July, $75 to $80 calls. I didn't want to go too heavy for earnings, right? Not short-term call options. I also didn't want to write short puts into earnings for like 6,000 something dollars in capital. I went with a very tiny swing trade on Nike. It didn't play out. I was looking for a quarterly turnaround. Didn't happen. The turnaround story is not here. We'll see what happens with this position. I'll let it run for maybe another month or two, but it may be resulting in a loss as well. We'll keep an eye on it. NVIDIA, this was also a lottery swing trade into earnings. Did not work out. We're probably going to take very close to a 90 to 100% loss on this one. They are for May, guys. We're running out of time on these. If I can recapture with an NVIDIA upswing in maybe the next few weeks, if I can recapture like $200-300 on these, I'll probably close it, but this one is lost. It was a lottery trade. If you want the proof of that, guys, it's in my lottery trade section, and I labeled it. I said, don't do this unless you won't want to lose $500 to $900. So I was willing to take the risk, and earnings didn't play out. After that, the Trump tariffs kind of took over this trade. So it is what it is. All these trades, guys, were profits from the early portion of the year that I chose to gamble with a little bit, and they didn't work out. Those are the Oxy calls that ended worthless today. The QQQ, this is also a lottery play that I took early in the week to go for the Max Payne trade. It was way far out there. It held its value Monday and Tuesday pretty well, but then just kind of unraveled. The VIX came down, the markets didn't move, so we lost 42 bucks right there. SOFI, 100 shares that we have from the wheel trade, as I showed you as well in the assignment tracker. SOFI, the break even on those, we got them at $16, guys. Only 100 shares. I've been managing with covered calls and DCA attempts, which I've never been assigned. Now the average cost is $13.91 on those SOFIs. We have 13.5 covered calls for next week. We'll see what happens. These were also earnings trades gone wrong. $1,000 lottery gamble on SOFI. You can argue that some of these gambles were a bit heavy, but I did them early on in the year and they were all with profits anyways, right? So keep in mind, I'm just using some of my profits to gamble with these, so not too bad overall, but these are pretty much cooked for September overall. SOXL, another trade that we took back in August. I'll remind you of the SOXL logic here. We've been trying to manage the position as best as possible. There's a few poor man's covered calls against it. The average cost is now $553. So I know it appears as if we lost everything, but we're only down about $500 there. Once again, all the way from back in August, I gave it almost 9 months worth of time, and semiconductors never expanded the entire way. I'll be winding this one down very shortly. SPGI, another swing trade on a solid company. SPLG, this is just the SPY ETF, guys. It's not 2 times leverage or nothing, just a SPY ETF. We got assigned the other day because somebody desperately wanted their dividend, I assume. And now our average cost is about $67.20. Next week, I'll be looking to write some covered calls for the month of April or May, depending on how good of a premium I can get on them. Just entry on the SPY, guys. And lastly, we have our TLT positions, right? And there's a few more. TLT calls, one for June, which are currently down on. This one was started last August. I DCA'd into it last week for $1.30. It's currently underwater again right now as the VIX has come down. And we have some leaps, January 2027, $80 calls, which are still up right now. TSLL, another very tiny wheel position. We'll wind this down on the Monday session. TSMC, swing shares, 176.50 entry, currently slightly above right now. We have a bull call debit spread on TSMC as well, which are up slightly on right now. And these 2 calls, remaining calls on Square, most of which we've round tripped by now, but we've taken our profits on Square, guys. I'll show you this right now. These leap calls, right? We had them for $555 each, right? We closed one for almost $1,000, the other one for $1,500. And now we're just kind of holding the 2 remaining ones into January 16th. We'll see if we can get some expansion on them. Maybe we can close them close to our break-even cost. But all this remaining capital, guys, is all profits. We already made our money on these. $1,000 total. Could have been a lot more if I closed these before the whole Trump fiasco, but it is what it is. You'll see a lot of unrealized losses right here. Why is that the case? Well, because all the profits I've already taken and I've de-risked this portfolio. This is all just kind of, you know, a lot of positions here are kind of like almost max drawdown, max pain positions. So I'll leave them on and see what happens overall. And we'll just keep all the buying power. I have full buying power now in this account to go shopping for more wheel trades. Overall, that's all I'll be focusing on. I'm happy with the share positions that I've built so far in the last 2 weeks during this correction. A few call debit spreads here and there overall. Not that many calls. 3 positions that are not in this portfolio. The Uber leaps, which I'm still well up on right now. The Microsoft leaps, which are currently down about 25%, June 2026. And the NVIDIA 121 leaps as well, which are currently down about 30%. I'll show you guys that in a future video, perhaps. They're down, but they're not down by that much. So much time on them. I'll leave them there. So that is just a recap of the portfolio overall. Hopefully that explains my trades, logic behind them, and why I'm holding back most of my buying power. A ton of buying power right now for this account. I'll just be looking for very easy wheel trades, in and out wheel trades overall. The wheel trades have been going very well recently. It's the bulk, it's the bread and butter of my account as of, as of always. And you can see there's no real wheel trades right here, right now. Sure, we have some assignments, but they're not, terrible right now for the assignments. And I'll be looking for new plays every single week and just continuously farming that premium overall, as it is the backbone of the strategy right now. I'll wind down as much of these call options positions as possible. The markets were different a month ago and a lot of these contracts were started, but now you can clearly tell I'm not opening any new call contracts at all in this market. Not many other call debit spreads as well, even though they're small. Literally just shares and wheel trades moving forward, guys. It's going to be a very volatile market, so you may as well acquire ownership in companies via shares. The call options, swing trades and stuff like that, leap call options, I don't think it's the current market environment for it, guys. We've got a lot of volatility ahead of us this year. Soft data soon, hard data maybe in the fall. So it's going to be a very volatile year. So you want to avoid any directional options plays unless you're day trading or intra-week stuff like that. I'm just choosing to build positions in shares and using the wheel strategy to generate some consistent income every single week. So that is it for everything, guys. Hopefully you enjoyed that. If you did, consider dropping a like on the video. And consider subscribing to the channel if you're new. We do these every Monday through Friday after the close. Lastly, if you have any questions, please feel free to leave them down below. I always love answering your guys' questions and comments. And lastly, if you guys want to trade with me live, trade with other around 150 plus members that have the same mindset, guys. Building, number one, very solid long-term portfolios, and number two, employing very consistent income-generating trading strategies such as the wheel, but also when times are good, we do a bunch of, short-term trades as well, call options, call debit spreads, leap call contracts, and share swing trades as well. Here are all of the trades since the inception of the Discord. The green check marks are wins, the reds are small little losses, the targets are assignments. Here are all the trades since the inception of the Discord. I'm very transparent with my wins and my losses. The way that I run the wheel is very consistent overall and very, somewhat conservative and doesn't require a lot of time management either. If that's something that you're looking for and to trade with myself and like-minded traders and investors, the link to the Discord is down below. We also do private morning live streams Monday through Friday for about 2 hours after the open, where I trade live and also take all your guys' questions and, comments on your stocks and your options. If you can't be there, they are all recorded. If you see a lot of trades, no problem. I have a huge position tracker in which I track all the trades and update it every single day. So that way you know exactly where we're at in our trades and the portfolio. Also, guys, we have private videos where I go through advanced option strategies that I do not show on YouTube, both for selling options and buying options, and as well how to grow accounts depending on your account size. Which strategies should you have in different account tiers, and what should be the allocation for each one of those strategies? Those are all videos that we have in the private Discord. And also you can ask me your questions every single day in our several chat rooms. I'm very fast to answer. And lastly, you also have access to all of my watch lists and all my technical analysis and all of my annotations. So if you see any technical analysis on all these charts, you get access to all of my watch lists, which is a very easy click of a button, copy and paste. You get them all. You get all my technical analysis levels too. And whenever I do any annotations, such as these, for earnings or otherwise, on over 100 plus stocks, you get all of that with just a very easy click of a button. If any of that sounds good to you, the link, of course, is again down below. And if not, I guess I'll see you back on the channel, guys. That's it for me. Hope you had a good week. I'll see you over the course of this weekend with, of course, the top 5 options video on Sunday. Take care, get some rest, stay positive in these markets, have a long-term mindset. And if you're doing a strategy, a trading strategy, guys, right now it's really all about either day trades, because the swing trades, they get unwound very easily with these headlines. Day trades or credit farming, decently away from the current market, benefit from that heightened volatility to either write puts under the market or on any very vicious bounces into overbought conditions, call credit spreads a decent amount away. And we are also employing some of those things in the Discord too. Credit strategies right now, guys, are probably the place to be rather than buying options and just getting chopped up by the volatility and getting chopped up by the news headlines as well. So keep that in mind, but just stay positive, right? And don't give up, guys. The mark of a true champion, when things get tough, do not give up. For a lot of you people, especially if it's your first time in a correction, This is the best opportunity to learn. And never forget, as Peter Lynch says, the strongest muscle in the human body during times of corrections for the stock market is not your brain, it's your stomach, right? So always keep that in mind, guys. If you're feeling too fearful or whatnot, just get up, guys, take a walk, but do not quit, especially do not quit and do not give up on your long-term investing strategy either. Your future self will gladly thank you for it. If we got through 2 world wars, a Cuban Missile Crisis, a Cold War, a global financial crisis, a tech bubble, you know, a global pandemic, the 2022 bear market, if you can get through all of that, guys, you can get through a little bit of tariff uncertainty and a little bit of political instability right now. Trust me, in the next 3, 4, 5 years, you'll look back on these markets and probably wish that you bought during these rough times, right? So take care. That's it for me. Have a good weekend and peace.